Although we have our YouTube series and online course on the legends of trading and investing, these are the big names that everyone already knows. However, outside of these superstar fund managers, some of the most successful traders and investors are people that you may never have even heard of. These people are likely to have their own inspirational stories as well, but they choose to go under the radar and commit to their craft. One of those investors is Herbert Wertheim, a self-made billionaire worth $2.3 billion. Not much is known about his investing, but luckily for us, Forbes recently ran an article on him and we wanted to share his remarkable story with you. For someone that hasn't gained too much media attention as an investor, Wertheim is surprisingly difficult to miss. At the age of 79, you'll rarely see him without his signature red fedora hat. Despite this flashy element to his appearance, his career has been anything but flashy. A student of the long-term buy and hold school of thought, his investing success could almost be said to mirror that of greats such as Warren Buffett. Although, unlike many of these famous top investors, investing has not been his full-time career. In fact, he attributes his other business ventures to the majority of his success. At school, Herby did not perform particularly well. In fact, at 16, he faced truancy charges in court, where he was offered the choice between state reformatory or the US Navy. He chose the Navy. This is where things began to really change for him, as he became one of the top performers in the class, particularly in mechanics and organization. He studied physics and chemistry there, and then moved into naval aviation. At this point, the Cold War was heating up, American industry was growing, and the Dow Jones had recovered the losses from the 1929 crash. With aerospace stock performing particularly well, Herby used his knowledge of naval aviation to purchase Learjet stock, which was well known for their role in aviation manufacturing during World War II. Once he left the Navy, he sold encyclopedias and studied engineering, before going on to work for NASA in a division that improved instrumentation for manned flights. He didn't graduate from his engineering course, but did graduate from the Southern College of Optometry after receiving a scholarship. After becoming an optometrist, he opened up his own practice where he worked for 12 years. He was also a keen inventor and would spend his spare time working on his inventions. At one point, he landed a contract for one of his inventions for tinted glasses. However, due to contractual breaches, it didn't pan out. From there, he decided to become more serious and created Brain Power Inc. and continued with his inventions. Today, the company has over 100 patents and an annual revenue of $25 million. It was the cash from this venture that he used to begin investing in the stock market. Herby's background in engineering, along with his experience as an optometrist and an inventor, paved the way for his style of investing. One thing he focuses on is a company's portfolio of patents. This has led him to investing in highly successful companies like IBM, Intel, and 3M. In a similar way to legendary investors such as Warren Buffett and Carl Icahn, he says that the key to his success is investing in companies with strong management. Another major focus for Herby is investing only in things that you know, a philosophy that fund manager Peter Lynch popularized in his book One Up on Wall Street all the way back in 1989.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it.
An example of this for Herby was investing in a company called Heiko, which produces airplane replacement parts. At first, he said the company was a disaster, but through his aviation background, he was able to turn the company around, and for the last 28 years, they have compounded net profits at a rate of 19% per year. His investment was made at 33 cents per share, and today they are worth a massive $80 per share, turning his $5 million investment into $800 million. Other extremely successful investments included taking Microsoft at the IPO in 1986 and Apple at its IPO in 1980. The reason he invested in the information technology sector early on is because he had been building computers and knew a lot about them. His company BPI had also been using Apple, and when Microsoft released the Windows operating system in 1985, a year before the IPO, he was convinced that not only would they be Apple's only major competitor, but the overall winners as well. Herby's goal is to buy and almost never sell. If a stock goes against him, he may purchase more of the stock as long as his research is still in favor of the company. He will then use the dividends to cushion the pain of stocks that are moving down or sideways. He believes if a company has great intellectual property, it will have lasting value. In other words, similar to what Buffett calls a moat or the pricing power that Carl Icahn looks for. If a stock is heading in his direction, he will milk the profit as much as he can, using the dividends to fund his lifestyle and make new investments. Take his investments in Apple as an example. The 1.25 million shares of Apple that he purchased in 1980 and the 1990s are now worth $195 million. However, as with all investors, he has also suffered losses. One stock he bought which didn't pan out as he expected it would was BlackBerry. He chose to cut the investment after he watched substantial profits disappear month after month. Herby also hit a margin call in 1982 after the Federal Reserve raised interest rates from 12% to 20%, which caused markets to collapse and cost him $50 million. This taught him a valuable lesson about the dangers of leverage. Today, Herby is mostly retired. However, he does still enjoy devoting time to his stock portfolio. Recent investments include BP. Although oil has not been performing well, he's betting on their intellectual property for hydrogen fuel cells, taking the dividend in the meantime as he waits on the stock price to recover. He also owns 15 million shares in GE, once again based on their intellectual property. He's pledged to donate half of his wealth, with the majority of funds going into public education, as without that, he wouldn't be where he is today. Overall, the lessons we can learn from this impressive investor are similar to other legendary investors we covered in our series and our course. Take a long-term approach rather than seeking out quick wins. Compound your wealth and your knowledge, the latter of which you can do by investing in what you know, and be willing to take losses, and more importantly, the lessons from those losses to ensure you get better and better. If you like this video, please do hit the thumbs up button and check out the description box below for some links to things you might also enjoy based on other successful traders and investors. Thanks so much for watching and see you in the next one.